What's up, everyone? I hope you guys are having a great weekend today. I know we didn't end up making the call on the Discord, but I want to make sure to leave you guys with some value. So I'm gonna make sure to wanted to make a YouTube video before I hit the gym, and talk about the strategy that I use when it comes to the charts. So I'm gonna go over it. So let's get right into it. All right. So basically today I'm gonna go over the things that I look at in the charts. The most important thing, if you guys already know about CT, most of you guys already know about CT, but if you're a beginner, make sure to go and watch him. It's all thanks to him. So basically, the most important thing when it comes to price is you always want to make sure to wait and trade after an external liquidity rate. So what does that mean? External to internal. So basically, we go from external to internal liquidity. Now, what does internal mean? Internal means important P rays, such as the most important one and the one I use, and that one all you need is a 4-hour fair value gap. 4-hour fair value gap. Every time we get into a 4-hour fair value gap, and then the external liquidity is basically sell side and buy side liquidity. So after we do a raid on sell side or buy side, you will most probably see a reversal. And also if we tap into a important PD array, such as a 4-hour fair value gap, breaker blocks, order blocks, etc., etc. Now, when it comes to price, the most important things that you also need to look at is time, which I will not be going over time. Time, SMTs, and open OHLC, which is open, high, low, close, which is a daily candle. It opens high and then it closes lower. Then inside of that daily candle, we have an AMD, which is accumulation, manipulation, and distribution. Now, I won't be going over that much as time, but if you want to look more into time, you can watch Hudson's videos about the macros and stuff, etc., etc. When it comes to SMT, you always want to make sure to use it as a confirmation tool, but it does not need for you to take a trade. If there is no SMT, you can still take it. SMT is just like the cherry on top of the cake. It's just use it as a confirmation tool, and it's going to help you a lot. You're always going to make sure to always pair the SMTs with the important key levels, which is external and internal liquidity, the 4-hour fair value gaps, important P rays. And yeah, now we're going to go over this. This is a daily candle right here. Inside this daily candle, we're going to have market maker buy models and market maker sell models. What does that mean? We're going to have the accumulation, the AMD that I was talking about, accumulation, manipulation, and then distribution. That would be the sell model and then the buy model, to take out all the stops that sold right here, and then we'll take out all the stops that bought right here. Now, when it comes to the daily candle, we're always gonna make sure, like I said, inside this daily fair value gap, daily candle, there's always gonna be a 4-hour range. What does that mean? It is gonna look like this. We're gonna have this daily candle, and inside that daily candle, we're gonna have candles. The 4-hour candles, we're gonna make breakers, we're gonna make order blocks, we're gonna have fair value gaps inside of this daily candle with the 4-hour, and that's all you need. Now, when it comes to the what's called the market maker sell models and market maker buy models, you never want to trade inside the time distortion or inside accumulation phase. You never want to trade during that. So you always want to make sure to wait for a 4-hour fair value gaps to be filled, or either sell side or buy side raid. What does that mean? So we want to make sure to take out either buy side liquidity or sell side liquidity before you take a trade. Or you can also enter, like I said, on the 4-hour fair value gap, which are my favorites ones, is inside this daily candle we would have a type of fair value gap, which is where the institution money gets in, which is an example right here. You always want to make sure we're always going to enter on the wick of the daily candle, which is the open, high, low, close. We're always going to make sure to enter at the very bottoms and highs. That's how I catch the tops and the bottoms. That's why a lot of people come up to me and ask me about how I catch the bottoms and the tops. That's basically it. All you need to do is wait for a open high low close. You always want to make sure to wait for the AMD to come in play, which is a market maker sell models, market maker buy models, and that's how you're always going to catch the bottoms and the tops. Now, a lot of people get closed down the trades because they don't know how to trade based on time, based on the most important thing when it comes to this is the higher time frames. Always want to make sure where the daily candle is heading, the 4-hour candles, because if you're trading, if you know where the daily candle is at, that's all you need. Now, when it comes to inside of the daily candle, there's going to be 4-hour ranges. Now, if the 4-hour range is just choppy, why do you want to go on the 1 minute and just sit on the 1 minute and take random trades? You're just going to trade on choppy price action just like this. You're not going to trade on important key levels such as external liquidity or internal liquidity. Once we do a stop rate, once we tap into a key level for value gap, order block, breaker blocks, that's the most important thing when it comes to your trades. Now, how does the entries are gonna look? The most important thing when it comes to the lower time frames, I see many people, even myself, I did that last week when I didn't know what I was trading at. I was trading during accumulation phase, during time distortion. I'm not gonna go over time distortion, but a lot of people know about it, and it's a really important factor when it comes to time. But most of us like to enter on the 1 minute time frame, which basically most of us do. Now, for you to enter on the 1 minute time frame, the 5 minute and the 15 minute are the most important candles that create the 4-hour candle. So you always want to make sure to wait and see how the 5 minute candles closes after a stop rate or after we tap into a point key level such as for value gaps, order blocks, or breaker blocks. Now in this example, I'm gonna go over the charts in a bit, but I just want to go over this example. So in this case, let's say we had a fair value gap or a sell side rate, which in this case right here, we can treat this as a daily candle. Let's say we just had a rate right here. So we just took out the low. Now, after that, you can enter. A lot of people do similar entries with ICT. You can enter on the breaker blocks right here, or you can enter on the inverse for value gaps, such as right here. And you can enter on order blocks, CISC, etc., etc. Now, when it comes to this, a lot of people, how we're gonna catch the bottoms and the tops, we're gonna enter on the very bottom. Now, when it comes to the bottom, a lot of people enter on the 1 minute candles, such as after an inverse, after a CISC, etc., etc. Now, when it comes to that, a lot of people get closed out because they don't know where they're trading at. So, if you're trading in the middle of this, let's say on these candles right here, a lot of people think that, let's say we tap a 1 hour fair value gap inside here, then we retrace. A lot of people are entering right here, not knowing that you have to first wait for a 4-hour stop rate or a 4-hour fair value gap to catch the bottoms and the tops. You never want to trade during reversals. You always want to trade during the distribution phase and the continuation phase. Those are the most important key times and ways for you to enter on trades, because those are going to be the most higher probability setups that you'll ever get. So now when it comes to the 5 minute candles, what you want to look at is this right here. Let me delete all of this so I can go over it. So if you want to enter right here, what you want to look for is, in this case, we're going to have that bearish candle. I'm going to make a little bit that candle. Then you're going to have a wick. And then you're going to have this wick right here. Now, out of the next 5 minute candle, how you want to look at it, this is where people get scared at. We're going to have the next 5 minute candle opens, bullish one. And let me change the color. And you're going to see something like this. You're going to see a high wick, take this low, and then just have this wick and close. Can either close right here and close like that. Now, this is where you always want to make sure to wait for confirmation. After this, I'm gonna go over how if you don't want to wait for this, you can. This is just one important key strategy that I like using. if you're a beginner, this is an important one. I can't put it on the middle, but I'm gonna just leave it like that. I know it's kind of ugly, but now what this 5-minute candle can do, this is gonna be more important if we have an SMT at the lows. This is where all the institutional money comes in. Now, if we have an SMT, like I said, it's just a confirmation tool. It's just the cherry on top. But if we have an SMT at the lows, the move is gonna be pretty quick. So you always wanna make sure to wait for an SMT, either at the 5-minute or the 15-minute. I'm not gonna go over the 15-minute SMT or stop run. I'll leave that to Hudson because he's the one that wanted to talk about it. So, like I said, this is gonna look something like this on the 5-minute candle, on the 5-minute time frame. I just put right here on the text 5-minute so you guys can see 5-minute candles. Now, where not a lot of people know about this, but when it comes to the closures of the bodies are gonna tell the story. Now the wicks are gonna do the damage, but the body closures are gonna tell the story. Now what a candle can do is it can look different ways. It can just close right here, over 50% of the range. It can close right here, or it can close above it, or it can just close right here. Now, the most important thing that you want to look at for you to take entries is wait for OTE of that candle. This is not a lot of people know about this, but let's say we have a bullish candle like this, right? This bullish candle can do that, but as long as this candle closes above 50% of this candle right here, like you see in this case, it can close, let me edit the candle. It can close like this, and it's a lot of people think that that's bearish. No, if we have an SMT, the buying pressure is going to be strong. That's where the institutional money comes in. And you always want to make sure to wait. If the candle doesn't close above it, it doesn't need to close above it. It can just close 50% of the range. And what price is going to do on the 1-minute is going to do something like this. It's going to open like this. Or let's put it a little bit higher. Let's say we close right here. The candle is going to do something like this. It's going to open. We're going to have the wicks. And this is where people get scared and closed out. That's what we do on the 1-minute. After this 5-minute candle, you always want to make sure to wait for it to come down to 50% or OT of the range. Now we're going to look at how it looks on the 1-minute candle on examples. Let's go on the charts. So we're going to see right here, let's go on the 4-hour time frame. We're going to show an example of Friday's price action. Now, what do we have right here? The most important key levels, which are 4-hour fair value gaps, which we have right here. Right there. We have your, let's look at the daily candle, our highs and lows. You have your high, you have your low. Right here. Let's go over the 4-hour. Now let's go on the 5-minute. There's gonna be a clear example right here. Now, I'm not gonna go over the 4-hour fair value gaps or why we dumped lower. I'm gonna go over that in a couple more videos. I'm gonna just go over the basic that you guys can start taking action with, which is a 5-minute and the 1-minute it's called entries. And over this video, I'm gonna go over the 30-second entries, which not a lot of people know about it, and it's gonna give you huge RRs. And this is gonna be the most important thing that is gonna help you with the 30-second entries. Now, in this case, you see how we tap the key level 4-hour fair value gap, and what we do is this, like I showed on the last example. We have this candle right here, all this candle. Now you see how this candle closed above it. You have your bullish candle that closed like this, and then you have another candle that closed like that. Now, where your entries are gonna be, like I said, is 50 of the range, or OTE of this 5-minute candle. And you see how we tap it and then we push higher. Now let's go on the 1 minute and see how that looks. Now, right here, there's gonna be multiple entries. But like I said, if you wanna be secure, if you wanna have a higher risk to reward, if you wanna have a better confirmation, a high probability confirmation, you're always gonna make sure to wait for the 5-minute closures. Those are gonna tell you the story if you wanna do a reversal. Now, this is one of the entries. This is one of my favorite entries because right here is where we have a lot of accumulation phase, and this is where people get closed out. Now, after we do this, after we tap the 50% or OT of the range, we have a strong move upwards like we do right here. We have accumulation phase, stop run, 50% of the 5-minute candle range, and then we pump. Now, right here, there's multiple entries. This is where the normal people enter. We have the inverse for value gaps, and then we have the normal gaps, then we have these inverse. Now, I'm gonna go over this example right here. Most of you guys are watching this video. If you trade ICT, I know most of you guys in the Discord would probably take in this trade right here, this inverse right here. And the reason this fair value gap didn't get inverse is because of the body closures of the 5-minute candle. Like I said, you always want to make sure to wait for those. Now, a lot of people could have entered on this after this candle closed above this inverse, but this is where people get closed out. Now, if you don't wait for the 5-minute, what price can do is just close and then just keep dumping, you know? That's why you always want to make sure to wait for the 5-minute closures, because the 5-minute, the 15-minute are what builds the 4-hour candle. So you always want to make sure to have higher probability setups, higher probability entries. Now, the reason we didn't tap this is, like I said, the 5-minute. Let's go on the 5-minute again. I'm gonna show you guys the same example. Like it went over it on top of it. We have this bullish 5-minute candle closure. Now, what the next candle can do is either, in this case, you measure the body, high and low. Now let's look on the 1 minute and see how it looks like down the 1 minute. Right here, you see how we closed above it, and then the next candle opens, goes lower a little bit, 50% of the range at this order block or breaker block, however you want to call it. That's one of the entries. Now, like I said, the most important entry is going to be this one, 50% of the 5-minute closure. And then we also have this important, let me see, inverse value gap right around here that gets inversed. So you can see it gets inversed, then we pump. Now, you always want to make sure you could have entered right here, and you always want to make sure to only go to RR. You can put your stop right here, and then you can go and target 50% of the range, which is this. You target the highs, put out the fib to the lows. Now, you would take half of your positions here, or you can take all of them right here, 50%. And for you to, because most of the time, if you don't take partials or profits at 50%, what price can do is, if price doesn't close above 50%, you're most probably going to see a reversal, and you're probably going to get closed out or a break even. So you always want to make sure to manage your risk and take as much profits as you want. Now, after this, after you close above it, if you want to re-enter another trade, you want to see bearish Peter rays get disrespected, such as this one right here. You see how this inverse value gap gets disrespected. This is where we have another good entry for us to go higher and target all this generated buy side liquidity right here. Now you see how after we touch this, we dump lower, huge premium. We also have a lot of resistance here, which made us dump lower. We dump lower to where? 50% of the range. And then we have another accumulation phase, time distortion. I'm not gonna go over that, but there's certain times of the hour or certain time of the day which we do this accumulation phase, and then we do the reversal to go the opposite way. I'll go over that in another video, but I just wanted to go over these important levels, such as the 5-minute, wait for the 5-minute closures and the 1-minute entries. Now when it comes to this, the most important thing, like I said, is patience and good risk. And a lot of people want to catch the bottoms and the tops, but if you want to catch the most higher probability setups, these are going to be the key ones. Now I'm gonna go over the 30-second entries and the 1-minute entries. It's gonna be the same thing as the 5-minute, but just on the second lead time frame. Oops, I forgot it doesn't let me. I don't got the plan. I'm gonna go over my top step X and show you guys, since it lets me right there. And just wait. I hope you guys are, I'm adding as much value as I can to you guys. I hope you guys are gaining something from this video. All right, let me just delete all the drawings, remove drawings. All right, so we're gonna go over the move that we had yesterday, which is this gap right here. Now let's go over the 30-second time frame. Right around here. Now, as you can see, this is gonna be the trick with this. What you want to make sure to do in this case, you're gonna pair the 30-second time frame with the 5-second or the 15-second. Now, like I said, you always want to make sure for this candle, we have the wick, we have this bearish candle, we have this wick, close above it. Then you want to wait for price to return to 50% of the range. Let me delete this. We have to go over now to the thing. As you can see, what we do here, after the 15-second candle closure, you want to wait for price to tap and come down to 50% of that candle for you to enter. That would be the first up close 30-second candle. And as you can see, after the candle closure, we come lower, tap that this for value gap, and after that for value gap, we have this order block or breaker block, however you want to call it, and we also tap 50% of the range. Now after this, all you want to do is enter, put your stop loss right here, previous and low, and that's how you catch the bottoms and the highs, the tops and bottoms. Now we're gonna go over an example, another example on the 30-second. Let's see if we can find another example, good example. Just delete all of this, remove drawings. This example right here of this range. We have this range, swing high, swing low, this 4-hour candle. What do? We come and fill this important key level, what I said over the video, 4-hour for value gap. Now, let's go over this. Let's go on the 30-second. Let's see if I can find it. Alright. Right around here. Now, I don't know if we have a SMT, but most probably we had an SMT right here. When we have an SMT, it's going to be a stronger probability. So what you always want to make sure is wait for that SMT. Now, like I said, on the 30-second time frame, if you want to do this, you can do this. Wait for the huge move upwards. First up close candle, target the 50% of the body. You measure the high and the top. Or like this. Let me see. Is it at right there? And as you can see, we tap 50% of that, and then we push higher. That's how you want to do your entries. You want to wait for the 30-second candle closure, or if not, you can also enter on the 15-second time frame. Just after the first body closure, measure the high, the low, and the high, and then go on the 15-second. As you can see, these two candles are going to be the 30-second. You measure the low and the high, and what do? Come back down, fill this breaker, inside the breaker for value gap, come down to OTE, and then we push higher. That's how you want to do it. Now, you always want to wait and make sure to do your 30-second entries or 1-minute entries after we tap into a 4-hour for value gap, or after we take out sell side or buy side in a daily candle or 4-hour candle. You don't want to make sure to just look at the 1 minute and just stay on the 1 minute. If the 4-hour candle range is choppy, why are you waiting on the 1 minute to look for entries? All you're gonna do is just trade during accumulation phase. Like in this case right here, just accumulation, and you're gonna get chopped out. Now, like right here, accumulation, you're gonna trade back and forth. You're gonna buy. Oh, we just did a SMT internal SMT. Oh, let's buy. Oh, we did. Now let's buy right here. Now let's sell. You're just gonna get up and down, up and down. You're just gonna blow your accounts and just go on a losing streak. That's why it's important to wait. Now, what a lot of people do is right here. In this case, let's say right here. Oh, we tapped this 4-hour candle. 4-hour for value gap. Oh, we had a 30-second up close candle. Now let's enter. Let's wait for the body closure. Oh, we tap it. Now let's enter on the long. And then you target a long, and then all you do is get closed out. Why? Because you're not waiting for the specific time of the day, and you're not waiting for confirmation. Like you see this case, these 30-second candles, we have a lot of wicks. When we have a lot of wicks, it's a higher probability we're not going to keep going higher. In this case, you see how the bodies tell the story and the wicks do the damage. You always want to make sure for the bodies, see how they look. And as you can see, these bodies are pretty strong. And you also want to make sure for important key levels such as this bearish PDRA to get disrespected. As you can see, we got it disrespected multiple times, which could have given you multiple entries for you to long and catch the bottoms. And that's how you catch the bottom, guys. That's all I wanted to go over this video. I just woke up. Sorry if I'm pretty bad with my talking. I'm trying to get better at talking on the videos and show you guys as much knowledge as I can. But I hope you guys have a great weekend today. I'm gonna make sure to do a video 2 or 3 times a week so I can show you guys what I look in the charts. I hope this video helped you guys in some kind of way. And yeah, I'll see you guys later.